Hello, my name is Jason Mercer. I'm the Toronto Real Estate Board's Senior Manager of Market Analysis. I'd like to take a few minutes of your time to go through our most recent economic and commercial real estate update. And we're dealing with May 2011 statistics. May was a big month for commercial real estate transactions. For example, we saw over 900,000 square feet of leased space transacted through the Toronto MLS system. And this is almost double the volume that we saw in May 2010. And we can also break this number down by the type of real estate that was transacted. So for example, on the leasing side of the market, 87% of those transactions were accounted for by industrial property types. And so what's driving the commercial real estate market? Well, to answer this question, we have to back up and think about what's been going on in the Canadian economy broadly. What kind of growth have we been looking at? And certainly in the first quarter of this year, that growth was very, very strong. We saw a 4% annualized growth rate in the first quarter of this year. And this growth was really driven by sectors that are important to the GTA economy. Sectors like manufacturing, like transportation and warehousing, and wholesale trade. These are all sectors that were driving that strong growth rate that we saw in the past quarter. So as we look forward through the second half of 2011 and into 2012, what are some factors that we're going to have to consider? Well, interest rates are important. Obviously, when businesses are thinking about investment decisions, including those for real estate, they're thinking about, well, what's our cost of borrowing? Well, the Bank of Canada recently announced that they're keeping their policy rate, the target for the overnight lending rate, flat at 1%. But in their release, they also indicated that we're probably looking at interest rate hikes, or certainly a higher probability of interest rate hikes in the second half of 2011 and moving into 2012. The second thing that's important to consider, especially when we're thinking about the economy in South Central Ontario, in the Greater Toronto Area, is the value of the Canadian dollar vis-a-vis the US. And certainly that's been quite high over the last few months. That impacts the export market. Companies that are producing goods and services for export to the United States. And so as we move forward, including our June 2011 economic and commercial update, we'll be keying in on these issues and thinking about what it means for the commercial real estate market in the GTA over the next couple of years. Thank you very much for your time, and I look forward to speaking with you again soon.
Brought to you by GTA Realtors.